Good afternoon. Welcome to ASEAN Business Report. Today is Friday, the 3rd of February 2012. You're with me, Patsurang Desha Putharangsi.
And I'm Weena Jongprasit. We'll start off first with our national headlines. The Bank of America Merrill Lynch sees risk in the Thai currency and capital controls if the Bank of Thailand, or BOT, is assigned to take responsibility of the 1.14 trillion baht legacy of debts incurred during bank bailouts in 1997. Ashok Bundia, a strategist for Asia-Pacific foreign exchange and currencies at the BAML, said that this is a concern. He noted that in the next 5 years, the baht would underperform other regional currencies if the BOT has to be responsible for the Financial Institutions Development Fund, or the FIDF, debt. He said that structurally, Asian currencies are expected to appreciate in the long term, with short-term caution on volatility tracking from the West. BAML expects the baht to weaken to 32 to 32.50 baht per US dollar by the end of March and to 30.8 baht by year end. The FIDF issue is not included in these estimates. Bundia said if the BOT is required only to service the FIDF debt, it would likely be less negative for the baht. If it has not also to pay the principal and roll over the debt that is due this year, that will hurt the currency. However, the draft executive decree, which is currently pending royal endorsement, has not yet been disclosed. He said once they see the language in the emergency decree, they will see the Bank of Thailand's commitment on the legacy debt. According to the Bank of Thailand, the draft executive decree shifts to central bank responsibility for repaying the FIDF's 1.14 trillion baht debt. The FIDF amassed this huge debt in the rescue of several banks after the 1997 financial crisis. According to a 2002 decree, the BOT is required to make a payment on the principal whenever it earns a yearly profit and returns on foreign reserve management operations. The central bank has reported annual net income once since 2004, and in 2010 reported a net loss of 117 billion baht, mostly due to losses on foreign exchange. Bundia said that the Bank of Thailand could now be more determined to prevent the Thai baht's appreciation if it has to earn on foreign exchange to pay down the principal. He noted that given the likelihood of capital inflows to Asia, there could be an increase in risk for capital controls in Thailand, which could affect foreign investors. Capital control measures are commonly designed to manage and limit foreign capital coming into the country and prevent currency appreciation. With the European and U.S. economic problems, foreign capital is expected to flow into Asia this year, where economic fundamentals are stronger than in the West. Managing Director for Merrill Lynch Asia Pacific, Victoria Ip, said that quantitative easing is expected in the European Union in the first half of this year, and the third round of QE is likely in the United States around the second half.
Well, banks will need to do a better job managing their funding costs at a time of plentiful liquidity and rising expenses stemming from expected higher levies to the Financial Institutions Development Fund. There was a statement by Khun Tak Bunnak, Executive Vice President of Bank of Ayutthaya. Well, Tak said while commercial banks await details of the new FIDF levies, they face challenges on other fronts as well. These include the new Deposit Protection Agency rules, healthy loan expansion in the post-flood recovery period, and the impact of the Eurozone debt crisis on global financial markets. Besides deposits, banks need to look for other sources of funds as part of their overall funding cost management. For instance, Kasikorn Bank plans to issue 10 billion baht worth of 10-year debentures at a coupon rate of 4.5% per year. Bank of Ayutthaya is also considering a debt issue. Declining policy interest rates are supporting plans by corporate bond issuers to lock in lower financial costs for the longer term. The Bank of Thailand has reduced its benchmark rate by 2 quarter-point steps since before the floods to 3% currently. Bank of Ayutthaya has forecast new corporate debt issues this year will be between 200 billion and 300 billion baht, compared with an estimated 200 billion baht last year. One of a total amount of debt to be issued this year, 19% is expected to be sold by property companies, 17% by energy companies, and 9% by banks. Tak said despite lower funding costs for bond issuing in line with the policy rate trend, the cost overall would not decline much due to higher credit spreads because of fears about the EU debt crisis. He forecasts that the central bank's one-day repurchase rate would still be 3% at the end of the year. He also believes more banks will start cutting their rates following the policy rate reduction of 0.25 points last week. Krung Thai Bank led the industry this week with cuts of 0.125 percentage points in its savings rate, minimum lending rate, and minimum overdraft rate. Other banks' reductions would depend on the strategy of each one, given the strong competition for funds and excess liquidity of more than 2 trillion baht in the system. Tak also said that if other three banks, BBL, SCB, and K-Bank, want to reduce their funding costs significantly, they may cut their savings rates, as second-ranked KDB has. He added that BAY is monitoring market conditions and would follow the bigger players' moves. Kasikorn Bank, the country's third biggest institution by asset size, is expected to announce its rate move soon. And meanwhile, Siam Commercial Bank has taken the lead in shifting to raise funds through bonds. And yesterday it announced an offer of 10-year subordinated debentures totaling 20 billion baht, paying 4.5% a year with quarterly interest payments. The issue will open for booking from February 17th to 23rd.
The Finance Minister Kitirat Naranong is expected to submit to the Cabinet next week the list of names who will manage a planned insurance fund after Parliament voted on the emergency decrees to address the flood disaster. The two executive decrees for a 300 billion baht soft loan package and a 50 billion baht insurance fund to provide natural disaster protection were yesterday approved by the House of Representatives. Finance Ministry Permanent Secretary Aripong Pushaum said Kitirat was expected next week to submit the managers' names. Currently, the Ministry and Insurance Commissions are working out the details of the scheme. He gave his assurance that the 50 billion baht fund would be able to provide disaster protection to households and small and medium-sized enterprises. Aripong said the government insurance fund will act as a reinsurer for 60 local insurance firms. He believed private insurance firms would join the scheme because of lower premiums collected by the government. He said the fund will be established soon after the Cabinet approves the management team for the fund. The government decided to create the fund after local and foreign insurers demanded very high premiums from natural disaster coverage or refused to sell it at all after the severe floods last year. Aripong said that before the floods, natural disaster insurance premiums total about 16 billion baht. That was not much compared to a combined 800 billion baht for both life and non-life insurance premiums. Kitirat said the government would soon reveal details of investment projects after the emergency decree to borrow 350 billion baht sailed through the Constitution Court and Parliament. The opposition Democrat Party had petitioned the court to rule on whether the decrees were constitutional. They argued that there was no reason for the government to issue an emergency decree to borrow large amounts, and the decree process lacked transparency. The Democrats said it is not necessary to order the central bank to pay off public debt of 1.14 trillion baht. Kitirat argued that the government needed the credit line facilitated by the emergency decree, as proposing such spending through the normal channel of the annual budget would be time-consuming.